Markets are unlikely to have a runaway rally in the next few months, given that we have the general elections in May. All kind of predictions are holding, with even many now predicting the possibility of a weak coalition. The outcome of the elections remains difficult to predict, and hence it is good to look at stocks with a good dividend yield. Here are a few stocks that could have limited downside risk because of their dividend yields. Coal India. Coal India on an annual basis gives a dividend yield of around 7 to 8%. The company already declared a dividend of 7 rupees and 50 paise in financial year 2018-19. Another 9 rupees to 10 rupees per share dividend can be expected in February 2019. Annually one can expect a dividend yield of 10 to 8% at a share price of 230 rupees. The shares of Coal India are also a good bet on account of the fact that the shares are not very expensive at the current P/E of just under 10 times. It is unlikely that the stock would see too much of volatility, given that dividend yields would limit downside in the stock. The business of Coal India also is an assured business, that is virtually a monopoly. Again, this is a cash-rich company that is debt-free. Indiabulls Housing. One is getting the stock at almost half the price that was prevailing in Jan last year. From a 52-week high of 1,440 rupees in January 2018, Indiabulls Housing is now available at a price of 818 rupees. The shares of the company yield a pretty cool dividend yield of 5%. The company also declares a dividend of almost 4 times each year. However, NBFCs and housing finance companies have recently been at the receiving end of the ELAMP's crisis. The shares are also very reasonably valued at under 10 times 1-year trailing EPS. The price to book at around 2.6 times is also reasonable. The company is likely to grow business at 20% in the next few years. The stock hence looks attractive at the current price of 818 rupees. NMDC. NMDC is a government-owned iron mining company. The shares have recently fallen to 52-week low of 88 rupees. At a price of 90 rupees, the shares have limited downside risk to their dividend yields of near 5%. Last year the company declared a dividend of 4 rupees per share, and it is highly possible that it retains the same dividend, in which case the dividend yield would be very near to 5%. We are working on the assumption that the dividend would be maintained. The stock performance would also depend on iron ore prices, and NMDC tends to revise iron prices every month. All in all, the stock is a good bargain at the 52-week low price. Disclaimer. This video is strictly for informational purposes only. It is not a solicitation to buy, sell in securities or other financial instruments. Creator of this video do not accept culpability for losses and or damages arising based on information in this video. Thanks for watching this video. Please do like, comment, share and subscribe to our channel for latest updates.